please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
For now, we have another guest joining us.
Yes, we do. In fact, somebody who's joining us after a long time, Vinay Khattar, Associate Director and Head of Research at Edelweiss Broking, joins us with his key themes for 2018 and the view on the market. Vinay, hi, afternoon. Speaking to you after a while, and it's a good day, I guess. The markets are roaring. What could be the reason for such a surge in the markets lately? Do you think it's a combination of global and local factors? And what are you advising your clients to do now?
Hi, good afternoon to your viewers, and yes, it's been quite a while. So broadly, I think the market rally has been on for a long time now, 2-3 years running. Last 12 months have been very, very good. People have made a humongous amount of bets and a lot of money, and that's been led mainly because of domestic money. So if I were to just give you some broad numbers, the amount of domestic money that has flown into the markets in last 12 months has been almost equivalent to what the decadal flows were of the domestic money into equity markets. So that was the kind of flows that you saw, and significantly aided because there were no other asset classes to invest in. Inflation was low, so gold was really not preferred. Housing, real estate problems we all know of, and so on. Our sense is that this is likely to continue. The next year is going to see equivalent amount of domestic focus on equities as was seen in the current year or in the preceding year. Plus, the international flows should become better. If you were to just take a look at the global macro environment, you are having rallies in equities, you are having rallies in commodities. I mean, all the base metals are up significantly. If you were to say the crude has touched $70. And if I were to just comment, you normally find synchronized rallies in equities and in commodities in a manner which kind of takes you towards the last stages of the bull market. Are we towards the last stages of the bull market? It doesn't appear to be so. I think corporate earnings in India are going to come back. Globally, also things are just improving. But it's a roaring global bull market, that's for sure.
Sure.
So overall, the trend should continue, and we will get good opportunities to make money in the current financial year also.
Vinay, good afternoon. So I'm just looking at the strategy report, and you are expecting the Nifty earnings to zoom, is it? Nifty EPS FY 18, 19 and 20 from 500 to 600 to 720. And you're expecting Nifty to scale to 12,000 in FY 19?
So that's the broad sense. If Anuj, if you were to just broadly look at the numbers, 18 to 20% is the average Nifty growth that you've seen over last decade or two. Now, in last 2 or 3 years, we have seen Nifty very badly stuck at probably 0% or 5% kind of growth. A lot of earning downgrades happening. FY 19 appears to be the first year where we are talking about significant corporate earnings coming back. And if that were to happen on a very low base effect, 18 to 20% could be easily achieved. We must not forget that for almost 2 to 3 years, the earnings growth have been practically next to nothing. One. Second, this being an election year, our sense is that you will get a lot of impetus on the domestic consumption side. There's going to be budgetary supports. There is an infrastructure spend which is already in the full swing. A lot of positive effects of that should be happening. In addition to all this, exports is one area which has been completely missing, while the global exports have been doing very, very well. So if I were to just give a perspective, global emerging market export has been growing at close to 10%. You had that kind of an emerging market growth maybe closer to 2004 to 2007. And India was almost 2x of what the emerging market growth numbers were. We were growing like 20 to 25%. In the current cycle, when the global emerging market trading exports have been about 8 to 10% growth, Indians have been just growing at 5 to 7%. So our sense is that export basket, which has been the missing link, should also come back vigorously in 19 and 20. So a lot of engines are going to be firing, and corporate earnings should be quite good. So Nifty earnings growing by about 18 to 20% compounding over next 2 to 3 years. Is it possible? Our sense is absolutely yes.
Okay, you also said that there are many money-making opportunities, Vinay, so I'm going to take you up on that. One space that you're bullish on is this entire home building theme, and in that, you know, some of your key stocks have been names like Century Plyboards, Canfin Homes, etc. The only worry here is these are well-discovered stocks, and these stocks have, you know, tripled over the last 2 to 3 years. You think there's more juice left in this theme?
Oh, a lot. So when you have values migrating and long-term trends happening. These could be multi-year, multi-bagger themes, even if you miss the initial run-ups. Let me give you some perspective. The entire sanitary ware market in India is just 7,000 crores, 1 billion plus people, and 7,000 crore is the entire sanitary ware market in India. And out of that, only 50% is organized. Faucet market is just about 4,000 crores. I mean, you're talking about a population as large as India, and the numbers are so laughable. The open defecation rate in India is worse than that of Bangladesh and Pakistan. And the way the government is nudging people towards Swachh Bharat and so on and so forth, the opportunities in these segments could be huge. If you were to just speak to any of your class 4 employee or maids, the sense that we get here once you do this ground level conversation is that a lot of these people are going back to their villages and building houses and coming back to their jobs in cities. Now, a lot of the people that we speak to tell that if there was no Pradhan Mantri Awas Yojana, they could have never thought of building houses. So themes like house building, about tiles, about sanitary wares, these are multi-year themes, probably going to last maybe 5, 7, 10 years. And these stocks could give you very handsome returns even from the current level, though they have multiplied quite a bit, I agree.
Which is interesting because, you know, you don't have a real estate stock in this. So it's essentially about a home improvement and, you know, other plays like cement, so the ancillary plays, but not the real estate sector itself. That's done well as well, by the way.
Yes, this particular report doesn't cover so much about the real estate sector because at the time it was written, there was still a lot of clouds, there were a lot of question marks. RERA impact is still coming in. You have lack of clarity on how some of these stocks and the regulatory environment is going to play out. But real estate sector itself could give you a lot of interesting ideas going forward. That's a given. But at the point that this report was written, we didn't really have clear thoughts in terms of which stocks to bet on. So construction companies, accessories companies, ply, sanitary ware, those appear to be more clear and high visible ideas.
Okay, well, thanks for spotting all those themes for us. When you said open defecation, it reminded me of that movie, the Akshay Kumar movie Toilet. Of course, we're not proud of that, but well, you found some opportunity in adversity. So we're going to look at that theme very closely. Thanks, Vinay, as always, for stopping by, and we will speak to you once again.